Welcome back to the Digital Asset Report. This week, Bitcoin business is booming. The Bitcoin Policy Institute dropped a bold new proposal, Bitcoin Enhanced Treasury Bonds. Co-authored by Andrew Hans and Matthew Pines, the paper suggests that the US government should start issuing BitBonds, a new class of treasury instruments partially backed by Bitcoin. You might ask, why now? Well, nearly $9.3 trillion in federal debt is set to mature this year, and with interest rates at 4.5%, refinancing that is going to be expensive. The idea is that by allocating just 10% of bond proceeds towards buying Bitcoin, the US can lower its debt service costs, build up a national Bitcoin reserve, and give Americans a tax-advantaged savings vehicle in the process. The proposed $2 trillion BitBond program could save taxpayers $354 billion over the next decade, even if Bitcoin prices don't move. And if they do, those gains could significantly improve or even eliminate the national debt. This move builds on President Trump's March executive order establishing a strategic Bitcoin reserve. And Senator Lummis today called for the immediate passage of the Bitcoin Act, tweeting, "Only one nation will have the juice to own enough Bitcoin to underpin its currency as the world's reserve." And Congressman Nick Begich told the crowd at the DC Blockchain Summit last week that the US will soon be buying 1 million Bitcoin. Take a listen.
Bitcoin Act establishes the Strategic Bitcoin Reserve, a federal initiative to ensure that the United States holds a meaningful position in the most important decentralized financial network on Earth. With an eye to fiscal responsibility and innovation, the legislation outlines a plan to phase in the acquisition of up to 1 million Bitcoin, or roughly 5% of its total final supply over 5 years. Importantly, this will be done without raising taxes or increasing government debt. The Bitcoin Act is designed to be budget neutral, relying on Federal Reserve remittances, which exceeded $76 billion in 2023, gold certificate revaluations, unlocking additional capital without new spending, and updates to the Exchange Stabilization Fund. These mechanisms allow us to build a strategic reserve without burdening taxpayers, while also potentially offsetting long-term national debt.
And that urgency is not just political. Larry Fink, CEO of BlackRock, warned shareholders this week that if the US doesn't get its fiscal house in order, Bitcoin could challenge the dollar's status as the world's reserve currency. BlackRock's iShares Bitcoin Trust already holds $50 billion in assets, half of it from retail investors. And the firm's tokenized fund, Build, is on track to become the largest of its kind, with their TVL tripling in the past 3 weeks to $1.86 billion. Fink isn't anti-crypto. In fact, he's bullish on tokenization, but he sees real risk if the US falls behind on innovation or fails to manage its growing debt. Meanwhile, corporate America is jumping into Bitcoin too. GameStop is the latest company to adopt Bitcoin as a treasury reserve asset. The company plans to raise $1.3 billion through convertible notes to make the move. Investors weren't thrilled by the move. GameStop shares dropped nearly 25% on the news after rallying 15% last Wednesday. But the strategy echoes what Strategy has done with its Bitcoin stash, now over 500,000 coins strong. And the Trump family is now going even further. Eric and Don Jr. are launching a massive new Bitcoin mining venture, American Bitcoin, in partnership with Hut 8. The operation will control over 61,000 mining rigs, with Eric Trump serving as a chief strategy officer. The goal is to build a US-based Bitcoin reserve and take the company public. Whether through government policy, corporate treasuries, or family-led mining plays, Bitcoin is pushing its way deeper into America's financial future. The clock and the next block are ticking. If you enjoyed this video, be sure to follow along for more and head over to bitgo.com to learn even more.